Hello everyone, this is Gracie here. In this video, we'll be discussing illustration for 7 computation of most profitable mix. So, T Limited produces 3 products A, B, and C for the same manufacturing facilities. The cost and other details of these products are as follows. They have given a selling price per unit, variable cost per unit, fixed expenses per month, which is rupees 2,76,000, and maximum production per month is given, which is 5,000, 8,000, and 6,000. Total hours available for the month is 200 hours, and maximum demand for the month is 2,000, 4,000, 2,400. So out of the maximum production 5,000, 8,000, and 6,000, they were able to produce, or the demand for that maximum production is only 2,000, 4,000, and 2,400 for all the 3 products. The process hours cannot be increased beyond 200 hours per month. So in a month only 200 hours can be used. So we need to know in a month if it cannot increase more than 200 hours, then in an hour how many units can be produced. So as they are mentioned here, hours, everything will be based on hours. So you are required to prepare the most profitable mix. So when they ask you to prepare the most profitable mix, that means you are supposed to rank and find out which product gives you most profit. So usually the most profit will be looked into the contribution what you get. So your decision making techniques will always be based on the contribution what you get, and based on the contribution, increment and decrement of the products, profitable mix will be decided. So we will prepare the most profitable mix, then they've asked us to calculate the break even sales of the company for the month based on the mix calculated in the above case. So what is break even point is nothing but the position where the company gets where the company doesn't get more profit or gets into a loss. It's a position where it gets the investment the return will be equal to the investment what is made. So now let us get into the solution. So the statement showing the most profitable mix. So selling price minus variable cost will give you contribution. So selling price, which is 200 for A, for B it is 160, and for C it is 100. So selling price 200, 160, and 100. Variable cost per unit is given, so we will minus it directly, which is 120, 120, and 40 for C. So for A, 200 minus 120 will give you 80, and for B, 160 minus 120 will give you 40. For C, 100 minus 40 will give you 60. So the maximum production per hour is, as we have got the contribution per unit, and they have told us the maximum production is only 200 hours. So let us find out in 1 hour how many units can be produced. So to find out in 1 hour how many units can be produced, we have a formula where maximum production per hour per month in units divided by the total hours available for the month. So we are dividing units divided by number of hours, so which will give us for 1 hour how many units are being produced. So as the base is 200 hours, we will find out for 1 hour how many units is produced. So A produces in a month, maximum production is 5,000, so it takes 200 hours. So 5,000 divided by 200 will give you 25. Then for B, 8,000 units are being produced. So 8,000 divided by 200, which will give you 40. So 20 units can be produced under A for 1 hour, and for B, 40 units can be produced for an hour. Then for C, 6,000 is the total maximum production divided by total number of hours 200. So 30 units can be produced in 1 hour for C. So now we have found out the number of hours. So as we have got contribution per unit, which is 80, and we have got maximum production per hour 25. So contribution per unit into the number of units which you are producing in 1 hour will give you the total cost or the total contribution for per hour, which is 2,000 for A, and for B 40 into 40. So we have got this 40 is here 40, and now we have got the contribution per unit. As you know, you minus selling price minus variable cost, which is 40, and 40 units is produced in 1 hour. So for one unit, if it is 40, then for 40 units how much is it? 1,600. Then for C, 60 is the contribution per unit, and 30 units are produced in 1 hour, so it is 1,800 per hour. So this is the contribution for 1 hour. So for 1 hour it earns 2,000 A earns 2000, for B earns 1600, and C earns 1800. So based on this we will rank it. So as the ranking for A is more, as it produces 2000 units, and next is C as it produces 1800. So C stands in the second place, and next is B where it stands in the third place. So now, as we have found out the contribution per hour, next is we will be calculating the number of hours utilized by product A for the actual demand which has been met. So what is the actual demand which is met in the question is 2000 to 4000 and 2400 for A, B and C respectively. So now the number of hours utilized to produce to product A. So for 25 units, the hours for to produce 25 units as it takes 1 hour. The maximum demand as per the question what we have is for A it is 2000. Then I'm sorry. So the maximum demand for A is where it is supposed to produce, or the demand is met, is actually 2000 units. So for 25 units, if it is 1 hour, for the 2000 units to be produced, how many hours it requires? So cross multiplication. So 2000 into 1 divided by 25, which will give you 80 hours. So we have done with A as it ranks first. Next is C as it ranks second. So number of hours utilized to product C. So number of units, for 30 units if 1 hour is required, then 2400 units, that is 2400 is the 2400 is the maximum demand for the month for C. So for 2400 how much is it, is your calculation. So 2400 into 1 divided by 30 will give you 80 hours. So now as we have told, in a month only 200 hours is the maximum limit and there is no increase in it. 80 is utilized by A and the other 80 is utilized by C. So what is the balance? So 80 plus 80, which is 160. So out of 200 hours, 160 is used by A and C, because these the hours should be equally distributed to after looking into the profit what the product is earning. So the hours are equally distributed to the product A and C as it gives good profit, that is good contribution. So the remaining hours can be moved to product B as the profit is comparatively less compared to A and C. So the remaining hours, so the total hours per month is 200 hours. Hours utilized by A and C is 80 plus 80, which is 160 hours. So the remaining will go to B, product B, which is 40 hours. So after we find this, we will get into the calculation of total statement showing profit. So we calculated statement showing most profitable mix where we have ranked. Now we will minus the fixed cost and find out what is the profit what we have got. So why we are going to find out this profit is, as per the question, they have also asked us to find out break-even point. So before we calculate break-even point, let us find out what is the profit we get. So the total hours is 80, 40 and 80. So you got this calculation from here, which is 80 for A, 80 for C and 40 for B. So 80, 40 and 80 is the total hours to produce the maximum demand. So the what is the contribution per hour what you have got, which you have already calculated. So the contribution what you have already got is 2000, 1600, 1800. So we will be multiplying with the hours. So this contribution what you have got is for 1 hour. So for A, 2000, 2000 is the contribution into the total hours where you are using to manufacture to meet the demand is 80 hours. So 80 into 2000 will give you 1,60,000 for A. For B, 40 into 1600, which will give you 64,000. And for and for C, 80 into 1800 will give you 1,44,000. So now the total will be 3,68,000. So you add up 1,60,000 plus 64,000 plus 1,44,000 will give you 3,68,000. With this we will minus the total fixed cost, which is 2,76,000. So the profit will be 92,000. So how did you get 2,76,000 is from the question, which states fixed expenses per month is 2,76,000. So now we have got our profit. So they have asked us to calculate the break-even point. So to calculate the break-even point, fixed cost divided by PV ratio. So we need to find out what is PV ratio. So PV ratio formula is contribution divided by sales into 100. So the contribution, as we have calculated the as we have calculated in the in the solution. So this is why we have calculated the contribution per hour. So the total contribution what we have got is 3,68,000. So 3,68,000 divided by sales. So this is where you're going to find out sales. In the question, contribution is given, sales per unit is given, but the total sales is not given. So you need to divide it by the total sales. So we will calculate the total sales. So calculation of sales. For A, selling price per unit, that is what is the selling price which is given in the problem, into number of units which is produced in 1 hour, and how many hours does it take to produce the annual demand. So now 200 is the selling price as per the question. 200 is the selling price for A, 160 for B, for C it is 100. So 200 is the selling price into in 1 hour 25 units can be produced. So to produce and what is the total hours which is required to produce the annual demand is 80. So 80 hours. So this calculation you have got here, which is 80, 80 and 40 for B. So into 80, which will give you 4 lakh. Next for B, 160 is the selling price per unit. 160 is the selling price. Then you have 40. So 40 for B is where you have got from the calculation of the total number of hours for B, where you have got 40 hours. So into 40 into the total number of hours. So the total number of hours is as per the question is 40 units will be produced in 1 hour as per the calculation what you have done under profitable mix, into number of total number of hours is 40 hours to produce to meet the annual demand. So 160 into 40 into 40, which will give us 2,56,000. Then for C, selling price in the question is 100. So 100 into in 1 hour how many units can be produced, which is 40 units can be produced. So as for C it is you can produce 30 units. Then the number of hours which is required for to meet for production of C is 80 hours. So again we have 100 into 30 into 80, which will give us 2,40,000. So we will find out the sales. 4 lakh plus 2,56,000 plus 2,40,000 will give us 8,96,000. So now as we have got our sales, we will find out what is our PV ratio. So contribution divided by sales. So contribution as per the calculation we have, it is 3,68,000. So 3,68,000 divided by sales, which is 8,96,000, which we have got from the solution, that is the working note, which will give us 41.07. So now as we have got the PV ratio, we can easily find out the break-even point, where the formula is fixed cost divided by PV ratio. Fixed cost as per the question is 2,76,000. So 2,76,000 divided by 41.07% is the PV ratio, where you would be getting 6,72,023 only. So this is your break-even point. So let us discuss the next question. So the next question is illustration 8. Make or buying decision. A manufacturer company finds that while the cost of making a component for rupees 10, the same is available in the market at rupees 9 with the assurance of continuous supply. So what they are telling here is, to make the component, the cost was incurred is 10. And when it is available and it is also available in the market where the supplier gives it for rupees 9 on continuous basis. So during the course of the business he will start giving it to rupees 9. So they've asked your suggestion whether you will make or buy. So looking into this, you will tell that it is better to buy from the market because the cost is comparatively less as 9. When you make it, it is 10. So give give your suggestion whether to make or buy this part. Give also your views in case the supplier reduces the price from 9 to 8. So what if the suppliers reduce the price from 9 to 8? What will be your suggestion? The cost information is as follows. So in this cost information, as I've already told, the management will decide the or will rank the product or the decisions will be made based on the contribution what they get. So here we have materials, direct labor and other variable expenses, and also fixed expenses is given. So when we get into the calculation, what the management always does is calculation of variable cost per unit. So as the contribution formula is, why they decide based on contribution is, the major expenses which an organization or an industry incurs is the variable expenses. When that is set off, and if there is any income, that means the product can earn better income in the future, because the every running expenses are included in the variable cost, where fixed cost remains fixed whatever might be the situation. So the management has totaled up the expenses which is required to make the product. Material 3.50, direct labor 4, and other variable expenses 1. So only variable expenses is taken and calculated. So when we total up the variable expenses, we get 8.50. So what the management has decided is, prices quoted by the supplier is rupees 9. So where the supplier has decided to give the product for rupees 9. From the above, it is clear that it is better to make component internally so that the company can save rupees 0.50 on each component. So if you look into this only variable expenses, the company can make the product, because from the above it is clear that it is better to make the component internally, because the company will save 0.50, that is 50 paise on each component, because the total expense is 8.50, the supplier is giving it for 9 rupees. So where you can save 0.50. If the price quoted by the supplier is 8, so when the supplier quotes the price as 8, it is better to buy the component from the outside supplier, because the company can save 0.50 on each component which is purchased. So decisions will change based on the cost figures, that is majorly taking into consideration your variable cost. So now let us get into the next calculation, which is allocation of limited resource. A company running a resort with an adequate supply of labor presents the following data and request your advice about the area to be allotted for the cultivation of various types of fruits, which would result. So the company contemplates growing apples, lemons, oranges, and peaches, and in particular, they are given selling price per box, season yield in boxes per acre, cost is given, material cost per acre, labor cost per acre, picking and packing cost per box, transportation cost per box is given. Then other fixed overhead expenses, that is cultivation and growing, picking, transportation, administration, land revenue expenses are given, and they have stated in the question, the following limitations are also planned before you. They are available in 450 acres, but out of this 300 acres are available for growing only oranges and lemons. So out of 450, 300 acres are suitable to grow orange and lemon, and the balance 150 can grow any kind of plants, that is any kind of four fruits, that is apple, lemon, or mango, oranges, and peaches. Then the second point states, as the production may be hypothecated, that is pledged to banks. So if the production whatever is made is pledged to banks, area allotted for any fruit should be uh, I'm sorry, fruit should be demarcated into incomplete acres and not in fractions. So if there is any, so as the production whatever is made is pledged to banks, so the area should be divided in a complete acres but not in fractions. So the marketing strategy of the company requires the compulsory production of all the four types of fruits in season, and the minimum quantity to be is 18,000 boxes. So the company wants the production to be a minimum 18,000 boxes for each of the product, each of the fruit. So let us get into the calculation. So usually we will selling price minus all your variable expenses will give you your contribution per acre. So based on the contribution, we will rank the fruits and distribute the acres. So how many acres can produce how many boxes. So based on the boxes, the acres will be divided and given off. That is the calculation which is to be made. So now So as the company is running their resort, so with the land what they have, they're cultivating all these fruits. So which fruit gives better profit will be decided, and that land will be distributed to cultivation of such fruit, so that more profit will be generated, and it will be used for setting up all the loan which has been taken from the bank. So now let us get into the problem. Selling price per box is given, which is 15, and yield, season yield in boxes per acre is 500. So 500 cause so selling price is given for one box, and they have given season yield in boxes per acre. So in 1 acre, 500 boxes can be prepared, and they've given us the selling price. So selling price into the number of boxes which can be produced in 1 acre is given. So we will multiply selling price into number of boxes which can be produced in 1 acre. So 15 into 500 is the boxes which can be produced for apple, and 15 is the selling price for lemon. So into 150 boxes can be produced, so which will give us 15 into 150 will give us 2250. For apple it is 7500. Then for orange it is 30 into 100 boxes, selling price is 30, so which will give us the selling price as 3000. Then we have the next fruit, which is peaches. 45 is the selling price, and the yield what we are getting in boxes in 1 acre is 200. So 200 into 45, which will be getting 9000. So this is our selling price. So now we will minus our variable cost. So what are the variable costs which is given in the question is material cost per acre, which is 270, 105, 90 and 150. So we will take that. So material cost 270, 105, 90, 150. Next, the expenses which is given is labor cost per acre is given. So as we have already calculated selling price per acre, so we can take into consideration, as this is also an acre, we can take it into consideration for calculation. So labor is 300, 225, 150 and 195 for the fruits respectively. So we will take it 300, 225, 150 and 195. Then what are the other expenses which is given is picking and packing cost per box. So they've given for one box the picking and packing is 1.5 for lemon, 1.5 for 1.5 for apple, 1.5 for lemon, and for oranges it is 3, and for peaches it is 4.5. Then transportation cost per box is given, which is 3, 3, 1.5 and 4.5 for peaches. So how many boxes 1 acre yielding is 500 boxes. So this 500 into picking and packing cost per box is 1.5. So 500 into 1.5 will give us, that is 500 into 1.5 will give us 750. Next 150 is the yield boxes. So 150 for lemon it is 150 boxes. So 150 into 1.5 will give us 225. Then for oranges it is 100 boxes. So 100 into the picking and packing cost is 3. So 100 into 3, which will give us 300. Next, for peaches it is 200 boxes. So 200 into what is the packing charges, 4.5. So 200 into 4.5, which will give us 900. And the same way they have given here a transportation cost per box, which is 3 for apple. So 3 into 500 which will give us 1500. Then again we have for lemon it is again 3. So 3 into 150 boxes, which will give us 450. Then for orange again we have here a 1.5 into 100, which will give us 1250. Next for peaches the cost is 4.5 into 200. So 4.5 into 200, which will give us again 900. So we have got our total here. So we will add up the total here, which is we have got the sales and we got our variable cost. So the total variable cost for apple is 2820, and for lemon it is 1005, and for orange it is 690, and for for orange it is, so here the calculation for orange 90 plus 150 plus 300 plus 150, we will get the total of 690. We will get the total of 690 as for orange. So this is the total variable expenses. Then for peaches it is 150, 195, 900 plus 900, which will give us 2145. So now 7500 is the sales minus the variable overheads will give us the contribution. So for apple 7500 minus 2820 will give us the contribution per acre, which is 4680. Then for lemon 2250 minus 1005, which will give us the contribution per acre, which is 1245. Then for orange 3000 is the total minus variable 3000 is the sales minus variable expenses, which is 690, will give us 2310. Then for peaches, the total sales is 9000 minus variable expenses 2145, which will give us 6855 as the contribution. So based on the contribution what we have got, we will rank. So the peaches gives us higher contribution, so we will rank it as 1, where the contribution is 6855. Then we will get apple with the contribution of 4680, we will rank it as 2. Then we have our orange, which is 2310, will rank it at 3. Then lemon 1245, which is ranked as 4. So now the minimum number of boxes yield per acre in box. So as per the marketing strategy of the company, it requires the compulsory production of all the types of fruits in season, and it requires minimum boxes of 18,000. So 18,000 is the minimum boxes for all the fruits. Then the yield per acre in box. So apple for 1 acre it gives 500 boxes. So we will find out how many acres are required to produce 18,000 boxes. So 18,000 is the total boxes which is required, divided by, in 1 acre if you are able to produce 500 boxes, then how many acres are required to produce 18,000 boxes. So 18,000 divided by 500 will give you 36. In the same way for lemon, 18,000 divided by 150 boxes, which is there in the question, or you can also look into the solution here, 150 boxes. So 18,000 divided by 150 will give you 120 acres is required to produce 18,000 boxes of lemon. Then for orange, 18,000 is the minimum quantity which is to be met in the market, and 100 boxes are produced from 1 acre. So orange requires 180 acres. Then for peaches, 18,000 is the minimum demand, divided by 200. 200 is the number of boxes which can be produced from 1 acre, so it is 90 acres. So for apple it is 36, for lemon 120 acres are required, for orange 180, and for peaches it is 90. So based on the ranking, the highest ranking, if you look into the total, as it is already told in the question, they are available. Only 450 acres are available in the resort. So out of the 450, 300 acres will be used for oranges and lemons. So 300 acres will totally be used for orange and lemons. In that 150, which will be used for cultivating other fruits. So now if we look into this total, which is 36 for apple, lemon 120, and for orange 180, and for peaches 90, if we total up, you will get 426. So what is the total acres you have? 450 acres. So out of that, 426 acres are enough to produce 18,000 boxes of each fruits. So what is your balance acre? 450 minus 426, which will give you 24. So that 24, we will push that acres to produce peaches, as it gives us good contribution and more profitability. So now we will move the balance acres to peaches, which is 24. So now for 36 acres for apple, for lemon it is 120, for orange 180, and the remaining balance will be used for producing peaches. So 90 plus 24 acres will give 114 acres. So this is the total acres which is used. So now as we have contribution per acre, so for 1 acre if the contribution is 4680, as we require 36, as we have for 36 acres, what will be the contribution? So 36 into 4680 of contribution per acre will give you 1,68,480. Then for B, 120 acres into 1,245 For lemon, I'm sorry, for lemon, 120 into 1245 will give you 1,49,400. And the same way, the acres utilized for lemon is 180 acres. So contribution for 1 acre is 2,310. Then for 180 acres, how much is it? So 180 into 2,310 will give you 4,15,800. Then for peaches, the acres required is 114 into contribution per acre is 6,855. So 6,855 into 114 will give you 7,81,417. So this is our contribution for each fruit. So we will add up our contribution for apple, lemon, orange and peach. We will be getting the total contribution of 15,15,150. With that, we will minus our fixed cost, which is given in the question, which is stated as it is 2,10,000. So if you look into here, the fixed cost in each season would be cultivation growing 56,000, picking 42,000, transportation 10,000, administration 84,000, land revenue 18,000. So when we total up this, we will get 2,10,000. So 2,10,000 will be minus with the contribution. So we will be getting the total profit of 13,05,150. So thank you everyone. This is the end of the decision making technique problems under relevant costing.